Hello everyone, welcome to StudyIQ. In this video, I will bring to you the banking awareness for the month of September. This is part 1 in English. Let's start the video. Let's take a look at the industrial corridor that we are planning to build. So this is a circular by the Ministry of Commerce and Industry. The cabinet has green lighted 12 new industrial cities under the National Industrial Corridor Development Program. Now you know that in India, we have set up 11 industrial corridors like the Delhi-Mumbai Industrial Corridor, like the Chennai-Bangalore Industrial Corridor, etc. Along these corridors, we want to have 12 industrial smart cities. So we are already working on 100 smart cities under the Smart Cities mission. But now we want to have industrial smart cities. And how many? 12. So these were announced by Pradhan Mantri Modi, that 11 corridors, they form the national infrastructure pipeline. That 11 corridors are already being worked upon. Along these corridors, it is a good idea to now have industrial smart cities. So what will be these smart cities? That their names are very important. So remember all of them. There is Khurpia in Uttarakhand, Rajpura, Patiala, Punjab. Rajpura, Patiala, this is a stretch from Rajpura to Patiala. Rajpura is a place near Chandigarh. Dighi in Maharashtra, Palakkad in Kerala, Agra in UP, Prayagraj in UP, Gaya in Bihar, Zahirabad in Telangana, Orvakal in Andhra, Koparathi in Andhra, and Jodhpur in Pali. Now all of these 12 names are extremely important. And how much money government wants to spend on these 12 industrial smart cities? 28,602 crore rupees. So they want to create a very strong network of industrial nodes and cities. And here you must also remember that we have set up, the government of India, they have set up, 4 greenfield smart cities also. Greenfield industrial smart cities. Now, which one are those? Well, first of all, what is a greenfield smart city? A greenfield smart city is the one which has been created from scratch, right? That is called a greenfield smart city. And there are only 4. So 4 greenfield industrial smart cities have been created. They did not exist earlier, but now they do. So which one are those? So one is Dholera in Gujarat. Dholera Special Investment Region, DSIR. It is a greenfield industrial smart city. It is located around 100 km away from Ahmedabad. Then there is near Aurangabad called Aurangabad Industrial City, in short AURIC, in Maharashtra. It is another greenfield smart industrial city. It covers around 10,000 acres area in Maharashtra. Then we have Greater Noida. There is a integrated DMIC, Integrated Industrial Township, Greater Noida. Just remember Greater Noida, which is in UP. And of course, then there is Vikram Udyog Puri. In the exam, they can also ask you, Vikram Udyog Puri is a upcoming greenfield industrial smart city. Where is it? It is on the Devas Ujjain highway in Madhya Pradesh. Ujjain Devas highway. Devas is a city in Madhya Pradesh, and so is Ujjain. So on the Devas Ujjain highway, we have Vikram Udyog Puri. So these are the four developed greenfield industrial smart city, and now we want to have 12 more. But these will not be greenfield, of course. These are already places people are living here. These will be brownfield in nature. So that is what we want to do, and this will significantly promote industrialization of the entire country. Now let's come to a couple of important government schemes. So the Ministry of Heavy Industries and Public Enterprises, they have recently approved the PM E-Drive scheme with an outlay of 10,900 crore over a period of 2 years. So PM, what is the full form of PM E-Drive? PM Electric Drive Revolution in Innovative Vehicle Enhancement. So let's take a look at this scheme in much more detail. Now, what are the salient features of the scheme? The main, of course, is to enhance the electric vehicle mobility in India, to help in the electric vehicle adoption in the entire country. And it will replace which scheme? It will replace the FAME 2 scheme, FAME India scheme, that was also for promotion of electric and hybrid vehicles in India. FAME 2 scheme ended on 31st of March 2024. So the Union Cabinet chaired by PM Modi, they have approved the scheme called PM Electric Drive Revolution Innovative Vehicle Enhancement, or PME Drive, for the promotion of electric vehicles in India, and total amount will be 10,900 crore over a period of 2 years. So what are the major components of the scheme? Again, subsidies or demand incentives will be given worth 3,697 crore rupees. So they want to incentivize electric two-wheeler, electric three-wheeler, e-ambulances, electric trucks, and other emerging electric vehicle. Basically, if you buy an electric vehicle, then you will get subsidy. You will get subsidy or demand incentive, so that it becomes cheaper for you to buy and you are incentivized to buy it. So how many electric vehicles do they want to support through the scheme? They want to support 24.79 lakh electric two-wheeler. A smart way to know is that just make it 25 lakh. So 25 lakh electric two-wheeler they want to support. Remember, approximate, okay? They want to support approximate 3 lakh electric three-wheeler. Exact is 3.16 lakh electric three-wheeler, and they want to support 14,000 e-buses. 14,028, exact number, 14,000 e-buses. And it is a scheme by the Ministry of Heavy Industries. So how will they support? So the customers will be getting e-vouchers. So they are introducing e-vouchers for electric vehicle buyer to avail demand incentives under the scheme. At the time of the purchase of electric vehicle, the scheme portal will generate an Aadhaar authenticated e-voucher for the buyer. And this e-voucher will be sent to your mobile number, and with the help of this e-voucher, you can avail subsidy or incentive, and then you can go ahead and buy electric two-wheeler or electric three-wheeler like that. In fact, in this scheme, a special amount of 500 crore has also been kept for e-ambulances. E-ambulances. So this is the first time ever that there are incentives being given for the deployment of e-ambulances. Okay. And also in this scheme, 780 crore rupees has been kept for enhancing the vehicle testing infrastructure for electric vehicle. 780 crore has been kept for that also. So the scheme aims to enhance vehicle testing infrastructure with dedicated fund of 780 crore for developing testing agency. So if you want to open a testing agency for electric vehicle, then up to 780 crore is the allocation by the government to support you. Now, then there is a sum of 4,391 crore, which is for 14,000 e-buses, and these e-buses will be procured by the state transport units or public transport agencies. The demand aggregation will be done by Convergence Energy Services Limited. Convergence Energy Services Limited is a company which is a subsidiary of Energy Efficiency Services Limited. So Convergence Energy Services Limited, they will do the demand aggregation, and these electric buses will be run in 9 cities which have more than 40 lakh population. Which are these 9 cities? Delhi, Mumbai, Kolkata, Chennai, Ahmedabad, Surat, Bangalore, Pune, and Hyderabad. So these electric buses will be public sector buses, public transport buses. And the trucks are also a major contributor to air pollution. So the e-trucks, for that 500 crore has been allocated for incentivizing the e-trucks. Now, even in this scheme, there is a provision for electric vehicle public charging stations. So electric vehicle public charging station shall be installed in the selected cities with high EV penetration and also on some selected highway. So how many electric vehicle public charging station they want to have? They want to install 22,100 fast chargers for electric 4-vehicle, 1,800 fast chargers for e-buses, 48,400 fast chargers for electric 2-wheeler or 3-wheeler, and total for EVPCS for public charging station they will spend 2,000 crore. And as I told you, for testing agency 780 crore. So if you add all of this up, it comes to 10,900 crore over a period of 2 years. So that is the scheme. Now let's come to another thing, which is PM e-bus Seva. This is a scheme which was started by PM Modi last year. Now in that there is a payment security mechanism. So what is the meaning of that? So this scheme will support 38,000 electric buses from financial year 25 to financial year 29. and the total amount that will be spent is 3,435 crore rupees. So basically, there are these state corporation, let's say Haryana State Transport Corporation, right? It wants to buy an electric bus from Ashok Leyland company. So Ashok Leyland will take monthly payments instead of a lump sum. But the problem is that Ashok Leyland will be paranoid if these monthly payments will keep on coming and there is no delay. So what Convergence Energy Services Limited company will do is it will give payment guarantee, and therefore Ashok Leyland will not shy away. Ashok Leyland will give the electric buses to Haryana State Transport Corporation. Instead of lump sum, they will take monthly payment, and these are given guarantee by Convergence Energy Services Limited. If HSTC defaults in their monthly payment, then CESL will come into the picture and it will give the money to Ashok Leyland. So because the electric bus is very costly, so instead of lump sum, Ashok Leyland will take monthly payment from Haryana State Transport Corporation. So the majority of the buses which are by public transport agencies, they are run on diesel or CNG, mostly on diesel, right? So there is a lot of air pollution because of that. Because of the high capital cost of e-buses, the public transport agencies, they can buy these buses through public-private partnership on the gross cost contract model. They are not required to pay the upfront cost. The public transport agencies, they are not required to pay the upfront cost. Instead, they can pay monthly payments. But if there is a payment default, then Convergence Energy Services Limited will take care of the payment of Ashok Leyland. So the electric vehicle manufacturers, they will be incentivized or they will be motivated to give the buses to public transport agencies because their money will be secured by Convergence Energy Services Limited. So this is called e-bus seva PSM, payment security mechanism. So payment security will be provided by Convergence Energy Services Limited. Now let's talk about a very important scheme, NPS Vatsalya. And what is NPS Vatsalya? NPS is a national pension scheme. It is run by PFRDA, the Pension Fund Regulatory Authority of India, public sector company basically, PFRDA. It's a regulator for pension in India. Now, what is NPS Vatsalya? So basically, you know that people, they plan their retirement, right, through NPS. Here, you can plan your child's retirement. How? So let's say your child is 3 years old. Now he will become an adult when he turns 18. So you open an account, NPS Vatsalya account in his name, you contribute money in that, and once he becomes 18, account will be transferred to him. So the guardians or the parents, they can open NPS account in the name of their children from birth to 18 years. Even if your child is like just born, you can open NPS Vatsalya account. You can contribute to his retirement. And in this way, you are teaching your child about financial planning, pension, financial literacy from an early age. So you are opening an NPS Vatsalya account in your child's name and you are contributing money. What is the minimum contribution? 1,000 rupees per annum. 1,000 rupees per annum is the minimum contribution in the NPS Vatsalya account. So let me tell you all about the scheme, NPS Vatsalya. NPS Vatsalya scheme is a part of NPS under Section 12 and Section 20 of the PFRDA Act of 2013. Any minor who is a citizen of India is eligible for opening account under the scheme until attaining the age of 18. Once he is 18 years old, he or she, then the account will be converted to a normal NPS account. So the account shall be opened by the guardian or the parent for the exclusive benefit of the minor till he becomes 18 years old. When you open a account in your child's name, you will be given a unique pension retirement account number or PRAN. Pension retirement account number. And even there is a permanent retirement account number, that is PRAN, 12-digit number. So it has two full forms. Here, pension retirement account number is given in the name of the minor subscriber. And once he turns 18 years of age, the account of the subscriber shall continue to be operational and it will be shifted to NPS Tier 1 account. NPS Tier 1 account. Upon the attainment of 18 years of age, a fresh KYC will be done. So Contribution. What is the contribution? The minimum contribution is 1000 rupees per annum. As a parent, you can contribute 1000 rupees per annum into NPS Vatsalya account, and maximum there is no limit. Now, where can you open the account? Well, you can open it in the banks, India Post Office. You can open in the stock broking houses, and any other entity registered as a point of presence by PFRDA. So there are hundreds of POP or point of presence of PFRDA. There also you can go and get NPS Vatsalya account opened. You can also apply it online on the eNPS platform. And now let's take a look at very important exit and withdrawal from the account. Now, for the purpose of education of the subscriber, that is your child, treatment of specified illnesses, disability of more than 75%, or the reason specified by PFRDA from time to time, under the regulation, the guardian can withdraw. He will be allowed to partially withdraw up to 25% of the subscriber's contribution, excluding the returns thereon, after minimum 3 years from the date of opening of the account, for maximum 3 times till the subscriber attains 18 years of age. So let's say you have opened NPS Vatsalya account and your child is 3 years old. Now, till the time your child is 18, you can do premature withdrawal 3 times, maximum 3 times. Okay, maximum 3 times. You can only do premature withdrawal after 3 years of opening of the account. So if you open the account when your child turned 3, you cannot withdraw till he becomes 6 years old. So 3 years gap has to be there, and till he becomes 18 years old. So from 6 to 18, you can do premature withdrawal up to 25%, right? 3 times. So you are allowed to partially withdraw up to 25% of the contribution, your contribution, subscriber's contribution, after minimum 3 years from the date of opening of account, for maximum 3 times till the subscriber attains 18 years of age. And in what conditions can you withdraw? So there are only 3 conditions in which you can withdraw: education of the subscriber, critical, any specified illnesses, these are essentially critical illnesses, and disability of more than 75%. Only in these 3 cases you can withdraw, right? Now let's take a look at some specific condition. In the case of a death of minor subscriber, so you are the parent, these are parents, okay, these are parents, and he is a small child. So they open NPS Vatsalya account in the child's name, but if the child dies, then what? Well, then the entire amount will be paid back to the parents. What if the parent dies? Then another parent can register themselves as a guardian, do KYC, and then continue the scheme. What if both the parents die? Then any legally appointed guardian can continue the NPS Vatsalya scheme. Okay, and upon the attainment of 18 years of age by the subscriber shall have an option to continue or exit from the scheme. Subscriber here means the child. Once he is 18, he can take the decision whether he wants to continue or whether he wants to exit the scheme. Now, the legally appointed guardian, in case of death of both the parent, the legally appointed guardian may continue the account with or without making contribution to the account, and upon the attainment of 18 years of age by the subscriber shall have an option to continue or exit from the scheme. This is what is written here. Okay, if both the parents die, then any legally appointed guardian, it is his wish, he wants to continue contributing every year or not. In any case, once the child is 18, he can make his own decision. The child can continue because now the account is his, so child will make the decision. Now let's say the child has turned 18 years of age. Now what? Well, now the child has an option whether to continue the scheme or not. What if he decides he wants to exit? Then what? So 20% money he will get immediately as a lump sum. Okay, 20%. And 80% he has to buy a annuity plan. He has to buy an annuity plan wherein he has to invest that money in a fund, and then the returns will be again market linked, right? But if the total amount is less than 2.5 lakh, then he will be paid it lump sum. If the accumulated pension wealth is equal to or less than 2,50,000, 2.5 lakh, equal to or less than 2.5 lakh, then he can be given the entire amount as a lump sum. It is not required then to invest 80% in an annuity plan. He can take the amount as a lump sum. So this is how this NPS Vatsalya scheme will work. Now let's take a look at whether India has trade surplus or trade deficit with the countries that we do trade. So India has trade surplus with 151 countries and a trade deficit with 75 countries. And this is a data that is given by GTRI. That is given by GTRI. GTRI is Global Trade Research Initiative, right? Global Trade Research Initiative, GTRI. GTRI is a research group that focuses on trade, technology, and also climate change. So it talks about all of these things. So according to GTRI, we have a trade deficit. What is trade deficit and trade surplus? If we are doing more import from a country and less export, then that is trade deficit. If we are doing more export with a country than import, then that is trade surplus. So trade surplus is the ideal condition, and we have a trade surplus with 151 countries. Deficit we have with 75 countries for this 6-month period. So you can see that India has a trade highest surplus with America. $21 billion is the surplus with America. Second highest is with Netherlands. Whereas our highest trade deficit is of course with China. This data also showed that with 75 countries which we have a trade deficit with, there are 23 countries with which our trade deficit is more than $1 billion. And the top 5 countries with the highest trade deficits were China. We have a trade deficit with China. Look at the trade deficit, it's huge. Then with Russia, we have a trade deficit, with Iraq, with Indonesia, and with the UAE. So these are the countries with which we have the highest trade deficit. And India should not be concerned about the trade deficit with 11 countries with which we buy mainly crude oil, petroleum products, and coal, etc. Right? Because that is ultimately a requirement that we have. So we should not be too much concerned. For example, with Iraq, even with Russia, we are buying a lot of gas and oil from Russia these days because Russia is giving us discounted oil. So we should not be worried about this much trade deficit. So with those countries with which we have a trade deficit because of mainly oil, gas, and coal, we should not be worried about that. Now let's talk about a scheme, Pradhan Mantri Kisan Man Dhan Yojana. 5 glorious years have been completed. This is a scheme by the Ministry of Agriculture and Farmer Welfare. This scheme was launched on 12th of September 2019. Pradhan Mantri Kisan Man Dhan Yojana has been providing social security to all the land holding small and marginal farmer. Small and marginal farmer which have less than 2 hectares of land, right? So this scheme assures monthly pension of 3,000 rupees to all the small land holding small and marginal farmers. 3,000 rupees when they turn 60 years old. So let us know more about the scheme. So it is a old age pension scheme. It is completely voluntary. It is not mandatory, and it is a contributory pension scheme. So yes, you have to give some premium. Just like any pension scheme, you have to pay a premium. That premium that you have to contribute will be ranging from 55 rupees to 200 depending on how early you start. If you start early, you have to pay less premium, but if you start late, you have to pay more premium. You will start getting pension 3,000 rupees per month when you turn 60, and your age has to be between 18 to 40 if you want to apply for the scheme. So let's say if you start paying premium when you are 35, then obviously you have to pay more premium. If you start paying premium when you are 40 years old, so from 40 to 60 you have to pay premium. If you enroll for the scheme when you turn 18, then you have to pay less premium because you have to pay premium from 18 to 60. So then you have to pay only 55 rupees premium. If you start when you are 40 years old, you have to pay 200 rupees premium. So it will be in the range of 55 to 200 rupees, right? So you keep paying the premium until you turn 60, and then once you reach 60, you will get 3,000 rupees per month, right? Now all the farmers who have land up to 2 hectare, if you have land up to 2 hectare, then you are eligible. So currently Bihar leads with highest registration. Since the scheme started 5 years back, highest registration have happened in Bihar, 3.4 lakh registration. Jharkhand is second with 2.5 lakh registrations. And Bihar is number 1, Jharkhand is 2, UP is number 3. UP is number 3. You can see in UP approximately 2.5 lakh registration. 4th is Chhattisgarh, and Odisha is 5th. Odisha is 5th. Now, what are the benefits of the scheme? One, of course, you will get a minimum pension of 3,000 per month upon reaching the age of 60. The second advantage is that even if you die, your family will get 50%, that is 1500 per month as a family pension. These are the benefits. Now this is a chart of the pension. You can see if you start early, you have to pay only 55 rupees per month, and equal contribution will be done by the government of India. If you start very late, when you are 40, you have to pay 200 rupees premium, and equal contribution will be done by the government. And you have to keep paying the premium till you are 60. National Asset Reconstruction Company Limited, NARCL, which buys the stressed assets and the non-performing assets from banks, etc. It wants to acquire stressed assets worth 2 trillion rupees. 2 trillion rupees is nothing but 2 lakh crore. 2 lakh crore, 2 trillion rupees, right? By financial year 26. By 2025-26. So by 2026, NARCL wants to acquire 2 trillion rupees worth of stressed assets. And they have already acquired stressed assets worth 1 trillion rupees as of financial year 24. So how do they do? NARCL will buy the stressed asset from a bank, and then IDRCL will do the recovery. IDRCL can further sell that stressed asset to a third party, or it can do the recovery. NARCL and IDRCL, they are together known as bad bank, right? Together we call them bad bank. This is the bad bank framework that we talk about. Now let's come to an important observation made by the RBI. Savings down, financial liabilities up of the Indian households. This is said by the Reserve Bank of India. So the savings, the overall household saving, when I say household saving, I mean the gross household saving, gross financial saving. So they have declined to 18.4% of the GDP. 18.4% of the GDP. What about the net financial saving? What is net financial saving? Net financial saving is the amount of money left in a household after subtracting the financial liabilities. So even that declined to 5.3% of the GDP. These are the gross financial savings of the Indian household, and these are the net financial savings, right? Net financial saving is when you subtract the liabilities from the gross financial saving. So in this time, in these 10 years, approximately from 2013 to 2022, they were approximately 8%. But now look at this, they are just 5.3%. So there have been different studies done. Even Ministry of Statistics and Program Implementation, they have given a very, very latest data. So they are saying that the net financial saving of the household was down to 5-year low of 14.2 lakh crore in the financial year 23. This is the total net financial saving of the Indian household. Now RBI says in terms of percentage, this is 5.3% of the GDP, and Ministry of Statistics says in terms of amount 14.2 lakh crore in the same financial year. And you can see in the financial year 22, they were 17.1 lakh crore. Now they have decreased substantially. If you see the COVID year, when COVID came for the first time in the financial year 2021, that was the year, that was a COVID year, right? You see the household savings were very high because people were not spending on anything like tourism, or shops were closed. So the household savings were, net household saving, net financial saving were 23.3 lakh crore. And this was the highest in the last 10 years or so. Now if you see, now it is 14.2 lakh crore. If you talk about percentage, RBI says it is 5.3% of the GDP. Now recently there was a summit, right? There was a summit called Financing 3 Summit. Financing 3 Summit was organized by CII in Mumbai, and Chief Economic Advisor of India, Mr. V. Anant Nageshwaran, he gave a speech, and he used a word called financialization. Financialization, and this word can come in the exam. What is financialization? Well, financialization means the dominance of the role of the financial markets in the public policy. So according to Mr. V. Anant Nageshwaran, it can lead to a massive surge in inequality. It can distort macroeconomic outcomes and policy discourses. So let us see what is financialization. This is an important word. In the exam, they can ask you, what is financialization? Now look, if you talk about inflation in India, it is very high. That is why you see for the last 8 or 9 times in a row, there has been no repo rate cut by the RBI, right? Common man is suffering. If you see the economic growth it is not very high. Yes, our COVID recovery growth we are facing, but otherwise manufacturing sector is not growing at a fast pace. Now, all of these are concerns which affect the common man, right? Inflation, high inflation, for example, slow economy, job growth is very less. But if you see the share market of India in the last 3 years, it has increased from 50,000, the Sensex, and now it is hovering around 85,000. So if any person who has a know-how of the stock market, if he invested 3 years back, he would have made significant gains. I'll give you my personal example. I put money in the mutual funds when the market was around 52,000 and now it is 85,000. I have made approximately 80% returns. So you can say my wealth has almost doubled in the last 3 years, but same cannot be said for a common man or a daily wage laborer. So the advantages of the financial market are reaped by only a few. For example, there are not more than 5 crore people in India who have mutual fund accounts, right? So financialization, the advantage of financial markets is being reaped by only a few, and this is a major concern. We are talking about in India, the rich is getting richer, the poor is getting poorer, because the knowledge gap is very high, right? So this is a concern. And what will happen? Because it is the elite, it is the rich who are reaping the advantage of financialization. In the public policy, for example, this will be dominated by financialization. So we have to come out of that mindset and we have to focus on the grassroots. What affects a common man? How can we make the common man reap the benefit of a growing economy? Because the benefit of the growing economy is only being reaped by only a few people. So that is a concern that was said by Mr. Anant Nageshwaran. Now I told you CII Financing Summit, right? Financing Summit 3, organized by Confederation of Indian Industry in Mumbai. Michael Debrat Patra was also told to give a speech, and he said that the household savings in India, they are getting back to track. See, in the 2000s, 2001, 2002, I mean, those days, the household savings were as high as 15% of India's GDP. All the household saving. But we saw, the recent data by the RBI, they were it was very low. Like the net savings were only around 5% of the GDP. So they are increasing. The average in from 2011 to 2017, it was 10.6%, and now from 2017 to 2023, excluding the COVID year, it was 11.5%. So what did he say? He said that in the early 2000s, the household savings in India, they were 15% of the GDP. 15 until the global financial crisis of 2008, right? So he said that going forward, boosted by the rising income, since the middle class is becoming richer, the rising incomes, the households will likely build back their financial assets to the level similar to the 15% of GDP that was observed in the early 2000s. The process has already begun. The household financial assets, which were around 10.6% of the GDP during this 6 year, has already increased to 11.5% during 2017 to 2023. So he said that at the CII Financing 3 Summit. And now let's talk about another summit, that was the Global FinTech Festival. It happened again in Mumbai. Global FinTech Festival. It was organized by these 3 organizations: FinTech Convergence Council, National Payment Corporation of India, and Payments Council of India Limited. So these are the 3 organizations. Payments Council of India, we have FinTech Convergence Council and NPCI. And what was the theme? This was the theme: Blueprint for the next decade of finance, responsible AI, inclusive and resilient. This was the theme: Blueprint for the next decade of finance, responsible AI, inclusive and resilient. So during the Global FinTech Summit in Mumbai, Reserve Bank of India's Governor Shaktikant Das, he gave 5 key priorities for India's financial future. What are the 5 priorities given by Shaktikant Das? So these are financial inclusion, digital infrastructure, right? Cyber security, sustainable finance, and global financial integration. So these are the 5 key priorities for India's financial future. Let's talk about all of them. Let's talk about financial inclusion. Financial inclusion is already increasing. You must have seen RBI's financial inclusion index. It is now 64.2 at the end of the March. So it is showing a steady increase. So financial inclusion is important, right? And he said that Pradhan Mantri Jan Dhan Yojana is central to this achievement. Pradhan Mantri Jan Dhan Yojana, because of that, crores of people, more than 50 crore people opened their bank account, which was very important for financial inclusion. You can see 53 crore and with 66% of the accounts in the rural and semi-urban areas. Then he talked about digital public infrastructure. Digital public infrastructure. So enhancement of DPI has to be there. And now RBI is also working towards unique lending interface, which will make it very easy to obtain the loans. He talked about cyber security. So digital public infrastructure is a part of DPI, digital infrastructure. Now let's talk about cyber security. With the digitization comes a challenge of cyber security. So Shaktikant Das stressed the importance of real-time monitoring and regulatory compliances. And he also talked about Digital Personal Data Protection Act, which will empower the individuals with greater control over their data. Things like right to be forgotten, where you can get all of your data related to you on internet deleted, in the especially the social media companies, right? So he also said that the banks and fintech companies, NBFCs, etc., they are expected to adopt a customer-centric approach. There has to be transparency. They should also be vigilant about cyber threats, etc. Long-term sustainable finance. This is a challenge, but this is also an opportunity. So sovereign green bonds, green deposits, all of these, they have to increase. This is a challenge because people are not willing to take less interest rate, right? Greenium, we call it greenium. If there is a bond which is paying you 10.5% interest, and if there is a bond which is paying you 7%, but the 7% bond is investing into environment friendly project, chances are you will invest in this bond because it is paying you higher returns. People are only concerned with higher returns. They are not bothered about environment and all. So this remains a challenge, but this is also an opportunity, and the technology will play a transformative role. Strengthening financial infrastructure. So this is the 5th one. UPI, RuPay, all of this is the financial infrastructure. We have to work on that. Now let's talk about circulars. Basically, in the month of September, the first 15 days, there were only 4 or 5 circulars, and those also were very, very kind of very rudimentary, very factual. So there is nothing more to read in that. But okay, I will still cover them. The first circular is about the 31st meeting of the FSDC subcommittee. FSDC is Financial Stability and Development Council, right? Financial Stability and Development Council of the Reserve Bank of India. First of all, what is FSDC? Well, FSDC is a non-statutory body, and FSDC works under the Ministry of Finance, and it was set up in 2010 by an executive order of the Ministry of Finance. In fact, one question can be asked that Financial Stability and Development Council was created on the recommendations of which committee? So there was a committee in 2008, Raghuram Rajan Committee. So Raghuram Rajan Committee proposed for the first time the creation of FSDC. And what does FSDC do? Well, FSDC basically it monitors the macroeconomic and financial developments of the country. It assesses the risk to the financial stability, and it also enhances the cooperation or coordination among different financial regulators like IRDAI, PFRDA, SEBI, RBI. It helps in coordination between all these different regulators, and it tries to promote the financial inclusion. Now, FSDC, they have a subcommittee, and who chairs the subcommittee? The governor of the RBI. Governor of the Reserve Bank of India chairs the subcommittee of the FSDC. And who is the chairman of FSDC? FSDC chairman is the Finance Minister of India. So currently Nirmala Sitharaman is the chairman of FSDC. But be very careful, who is the chairman of FSDC subcommittee? Then the answer will be governor of the RBI. So that is the difference. And again, FSDC subcommittee, they met recently and they talked about all the macroeconomic and financial developments that are happening in India. right? They are happening in India. Now, there is a circular that came on 5th of September. It talked about the auction of the government securities. So Government of India, they auctioned securities worth 29,000 crore on 6th of September. You can see the maturity year and the rate of interest that they offered. So out of 29,000 crore, the securities were 6,000 crore. Government will pay you 7.02% and maturity period is 3 years. So 2027 it will mature. 12,000 crore worth of government securities had interest rate 7.23%, interest rate also known as coupon rate, and they will mature in 2039. Then 11,000 crore worth of government securities, 7.34% interest rate, and will mature in 2064. Reserve Bank of India has put a penalty on HUDCO, Housing and Urban Development Corporation. HUDCO company has recently become a Navratna company. It is a company that works under the Ministry of Housing and Urban Affairs. And HUDCO has, government has put, RBI has put penalty on HUDCO. How much is the penalty? 3,50,000 rupees. 3,50,000 rupees. Now, why the penalty has been put? Because of non-compliance with certain provisions of RBI KYC rules and NBFC HFC rules. They were being violated by the HUDCO company. So the company failed to undertake risk categorization of its customers during the financial year 22 and did not put in place a system for periodic review of risk categorization of accounts, and it did not create floating charge on the assets invested by it in terms of section 29B of the NHB Act in favor of its depositors and register the same with the registrar of companies. So these were the violations done by the Housing and Urban Development Corporation. Now RBI has put a penalty on Axis Bank. Why? So the penalty is a huge penalty, 1.91 crore rupees. And because they were violating certain provisions of Banking Regulation Act of 1949 and non-compliance with certain directions issued by the RBI on the interest rate of deposits, KYC, and credit flow to agriculture, collateral-free agriculture loans. That is very important. See, the thing is, agriculture loan, till 1.6 lakh has to be collateral-free. But look at this, the bank had obtained the collateral security for agriculture loans up to 1.6 lakh, which is not acceptable. Agriculture loans up to 1.6 lakh is collateral free. Also, the bank had allotted multiple customer identification code to certain customers instead of a unique customer identification code. See, every bank gives one unique number, unique customer identification code to a customer. But they were giving multiple customer identification codes. So this is a violation. So because of all of this violation, a heavy penalty of 1.91 crore was put. Then RBI also penalized HDFC Bank. This is a penalty of 1 crore rupees. Why? Well, so they were violating some rules issued by RBI on interest rate on deposit, recovery agents engaged by the banks, and customer service in the banks. Let me give an example. The banks opened certain saving deposit account in the name of ineligible entities. Those entities which were not eligible, even though, and despite that, their saving deposit account were opened by HDFC. HDFC Bank failed to ensure that customers are not contacted after 7 PM and before 7 AM. So you cannot contact a customer before 7 AM and after 7 PM, but banks are banks. And the bank gave gifts costing more than 250 rupees to the depositors at the time of accepting certain deposits, right? So the bank gave gifts costing more than 250 rupees to the depositors at the time of accepting certain deposit. Because of all these, HDFC Bank was put a penalty of 1 crore only. And on 13th of September, Government of India auctioned securities worth 22,000 crore. 11,000 crore each. On one, you will get 7.02% interest rate, 7-year security, matures in 2031. And the another one, look at this. People are investing for what? Almost 50 years. So this security will mature in 2073 and 7.46% interest rate is guaranteed. Now, Reserve Bank of India has cancelled the certificate of registration of 4 NBFCs recently. These are the 4 NBFCs of which license was cancelled. One is based in Bharatpur in Rajasthan, Bharatpur Investment Limited. Then we have Morena, Madhya Pradesh NBFC called KS Finlease. And then we have Buildcon Finance, which is from Kanchipuram. And then we have a company called Operating Lease and Hire Purchase Company Limited, which is based in Chennai. Now let's talk about a circular that came on 6th of September 2024. Liberalized remittance scheme for resident individuals, discontinuation of reporting of monthly return. Basically, in liberalized remittance scheme, one person can remit up to 2,50,000 US dollar per year abroad, right? This you know very well. So the banks, authorized dealer category 1 banks, which can undertake remittance of money, right, outside India, from India, the banks which are authorized are called authorized dealer category 1 banks. Earlier they had to file monthly returns to the RBI, like how much money went out of the country and all that. Now they don't need to do it. Instead, what they do, they are required to upload only transaction wise information, right? And this they had to do at the close of the business of the next working day. So if today some transaction has happened in under LRS, by next day close they have to tell it to the RBI. Okay, and if no transaction happened, then no need. But if there is a transaction that has happened, then by the end of the next working day, it has to be submitted on the CIMS portal of the RBI. CIMS portal of the RBI. Recently, Union Cabinet has approved the expansion of the scope of the Agriculture Infrastructure Fund. Now, as per this, it is proposed to extend. Recently, Union Cabinet has approved the expansion of the scope of Agriculture Infrastructure Fund. As per this fund, it is proposed to extend the AIF credit guarantee coverage of farmer producer organizations through which of the following subsidiary of NABARD. So this subsidiary is called NAB Sarrangshan Trustee Company Private Limited. The answer is NAB Sarrangshan. Basically, even the farmer producer organizations, they can take now the benefit of Agriculture Infrastructure Fund, and the credit guarantee to the banks and NBFCs etc. will be provided by the NAB Sarrangshan. Very important question. Agriculture Infrastructure Fund, you should know about it. Agriculture Infrastructure Fund scheme was started in 2020 by the Ministry of Agriculture, and in this scheme total amount 1 lakh crore was allotted, and this scheme will run all the way till financial year 26, right? So you can take a loan of up to 2 crore at very low interest rate. So basically whatever is the interest rate, you can take 3% interest subvention. 3% interest subvention is provided for loans up to 2 crore, and this is the scheme, right? You can take loan of more than 2 crore also, but then you will not get the 3% interest subvention. For availing 3% interest subvention, the loan has to be limited to 2 crore. And now the credit guarantee will be provided. Also, one more thing they have done, Pradhan Mantri Kusum Yojana Component A has also been integrated with Agriculture Infrastructure Fund. PM Kusum scheme was started in 2019 by the Ministry of New and Renewable Energy, and it has 3 components, Component A, B and C. Now Component A is a part of, Component A, if you want to install grid connected, solar power plants, then also you can take loan under Agriculture Infrastructure Fund. So Component A of the PM Kusum scheme has been added to the Agriculture Infrastructure Fund. Competition Commission of India has approved the proposal of the merger of Reliance Industries Limited Media Business with Disney India Media Business. So who will be the chairperson of the joint venture? Neeta Ambani will be the chairperson and Uday Shankar will be the vice chairperson of the joint entity, right? So do remember that. And now both the media businesses are coming together, and when they merge together, the value of that merged entity will be 70,350 crore rupees. So Neeta Ambani will be the chairperson. Also, how much stake will they have? That is a good question. So Reliance Industries Limited, they will have 16.34% stake in the joint entity. Viacom 18 Group will have 46.82% stake, and Disney will have the remaining 36.84% stake. But the thing is that even Viacom 18 Group is owned by Reliance. So Reliance overall will have approximately 63%. And Walt Disney will have approximately 37% in the joint entity. So Reliance will have the lion's share of the stake in the joint entity. Also, Competition Commission of India, they have recently approved the acquisition of Shriram Housing Finance Company, right, by Warburg Pincus Group. So Warburg Pincus is a group based in New York, and they are acquiring this company through their investment company called Mango Crest Investment. Mango Crest Investment. Which of the following organization has launched E-Dispute Resolution Scheme 2022 EDRS to reduce the litigation and provide relief to the eligible taxpayers? So this is a scheme which has been launched recently by CBDT, Central Board of Direct Taxes. So according to section 245 MA of the Income Tax Act of 1961, so this DRS has been launched as a part of section 245 MA of the Income Tax Act of 1961 to provide relief to the eligible taxpayers. So what does this say? This is about dispute resolution, right? This is about dispute resolution, but there is a limit. So the the limit is aggregate sum of variations should not be more than 10 lakh, and the returned income for the assessment year, for one assessment year, should not be more than 50 lakh. These are the condition, and I think I'm covering this because these can come in as MCQ. Most likely this can come. The returned income limit for one assessment year should not be more than 50 lakh rupees. If it is more than that, if the dispute amount is more than that, then obviously EDRS will not help. Who has topped the 13th edition of the Hurun India Rich List 2024? So you can see Gautam Adani and family. Gautam Adani and family, the wealth is 11 lakh 61,800 crore. Mukesh Ambani and family is second. Shiv Nadar and family is distant third. First and second, they are very close. So they keep on changing, right? So the total number of Indian billionaires is 334. A billionaire is a person who has a net worth of $1 billion. $1 billion, right? So that person is a billionaire. And Radha Vembu of Zoho is the wealthiest self-made woman. Her wealth is approximately 47,500 crore. Neha Bansal, co-founder of Lenskart, is the youngest self-made woman entrepreneur. She is 42 years old. Zepto co-founders Kevalya Vora and Adit Palicha, they are youngest on the list. Their net worth are 3,600 crore and 4,300 crore. They are just 21 and 22 years old. And here you can see richest NRIs. So Gopinchand Hinduja and family, they are based in London. Their wealth is 1,92,700 crore. Hinduja family, they are the richest NRI. Ellen Mittal is second. Anil Agarwal is the third. And all the three richest NRI, they are based in London. Which of the following central public sector enterprise has been granted the Navratna status by the Ministry of Finance? So recently, 4 companies have been given the Navratna status. Which are these 4? So their number also, if you want, you can remember, like which is 23rd, 22nd, all of that. The advantage of becoming a Navratna company is that you can invest 1,000 crore or 30% of your wealth, whichever is lower, in 1 year without the permission of the government, or you can invest 1,000 crore or 15% of your net worth, whichever is lower, in a single project. In 1 year, it is 30%. In one project, it is 15% of your net worth, or 1,000 crore, whichever is lower. So that is the advantage. So 23rd Navratna company is the Solar Energy Corporation of India. Solar Energy Corporation of India, right? Now, Solar Energy Corporation of India, this company works under the Ministry of New and Renewable Energy, and it is headquartered in New Delhi. 22nd Navratna company is the Railtel Corporation of India, right? National Hydropower Corporation is the 24th, and Satluj Jal Vidyut Nigam is the 25th Navratna company of India. Railtel works under the Ministry of Railways. And this is the official Government of India list. So here you can see finally the numbers are out. So 22nd is Railtel, 23rd is SECI, 24th is NHPC, 25th is SJVN, and 21st was Mazagodok Shipbuilder. Earlier, some websites were reporting that Mazagodok Shipbuilder was 18th, but no. According to the official Government of India data, it is 21st in the list. Which company has become the first non-technology company to reach a market value of $1 trillion? This is Berkshire Hathaway. This is a company that was made popular by Warren Buffett, right? So this is the first non-technology company to reach a market valuation of $1 trillion. It's a very old company, but it is mainly an investment company, right? So this company was founded in 1839. That time it was a textile manufacturing company. Then Warren Buffett took control of the company in 1965, and then it has become so big. The headquarters of this company is in a place called Omaha, which is located in Nebraska in America. National Payment Corporation of India has announced the introduction of BBPS for business. What is BBPS? What is BBPS? So BBPS simply means Bharat Bill Payment System for Business. Bharat Bill Payment System for Business. It's an interoperable platform. It is mainly designed for B2B transactions. See, mainly when you use UPI, you use it for mainly B2C, business to consumer, or C2B, consumer to business transaction. But one shopkeeper pays to another shopkeeper, that is called business to business transaction, right? These are very large transactions. So here most of the big corporations will be there. So one corporation can pay to another corporation using Bharat Bill Pay for Business. And to launch Bharat Bill Pay system for business, NPCI partnered with two organizations. One is a Mumbai-based fintech company called Ncash, and second is a neobank called Open. So NPCI partnered with Ncash and Open for launching Bharat Bill Pay system for the businesses. Dash has been recognized as the first self-regulating organization in the fintech sector by the Reserve Bank of India. So it's a very nice question. Self-regulatory organizations, they make sure that you are following the proper rules and regulation laid down by the RBI. And there were some conditions also if you want to become a self-regulatory organization in the fintech sector. So there were some conditions also. First condition is that you have to be a non-for-profit company, right? Under Section 8 of the Companies Act 2013. So you should be a non-for-profit company. Second is that no entity, no company should hold 10% or more in SROFT. So the ownership of one entity in a self-regulatory organization should not be equal to or greater than 10%. And then the minimum net worth should be 2 crore. Minimum net worth of self-regulatory organization should be 2 crore. These are the conditions. And all of these are satisfied to the supervisory comfort of RBI. The company is called FACE, Fintech Association for Consumer Empowerment. Very, very important question. It's an extremely important question, right? So the company is called FACE. And FACE company was started in 2020. It is headquartered in Mumbai. Moving on. So three conditions that I told you. It should be a non-for-profit company. No entity should hold 10% or more in its paid up share capital. And net worth should be minimum 2 crore. Tourism and Hospitality Skill Council, they have signed a MOU with which of the following company to upskill at least 20,000 Indian youth in the tourism relevant skill. Tourism and Hospitality Skill Council works under the Ministry of Skill Development and Entrepreneurship. So they will train at least 20,000 Indian youth in the travel and tourism skill because this sector is growing and it will create a lot of jobs. So this is a 3-year partnership. Skills will be provided by THSC and the money will be given by Visa. The answer is Visa, which is an American payment company. And this is a partnership at around $1 million. So Visa will spend around $1 million for training 20,000 Indian youth. 20,000 Indian youth. Now the tourism sector employs more than 4 crore people in India, right? And in 2023, it contributed $231 billion to India's GDP, which is approximately, you can say, 6 to 7% of India's GDP. In the recent report, Enabling Digital Payments for Women in India by UPI for Her initiative, 57% of the 2,500 women entrepreneurs surveyed were unaware of UPI-based merchant offerings. UPI for Her is a collaboration between NPCI and whom? This is a report. It's a, you can say it's an eye-opening report. This report shows that there is a lot of scope in the UPI. So this report was, this survey was done by National Payment Corporation of India in partnership with Women's World Banking, which is an organization based in New York. Now let me show you the report. I went through the report and I will tell you only what is exam important. Now look here. In India, what is the total population of women who are greater than 15 years of age? It is 53.6 crore. Okay. Now how many women in India out of 53.6 crore? 53.6 crore in India are those women whose age is more than 15 years old. So out of that 20 crore women in India, they have smartphones. That is, mobile internet users are 20 crore, right? If you break this down 20 crore or 200 million, then out of this 200 million or 20 crore, 7.4 crore are in the labor force and 12.6 crore are women who are out of the labor force. So 12.6 crore, they are not working, okay? And 7.4 crore, they are working. Now, if you break this down, this 7.4 crore, you further break it down. Okay. So 48 million who are working are self-employed. Self-employed means they have their own business or anyway, they are self-employed. 11 million are regular wage or salary people, and 15 million is the casual labor. Okay. Moving on. So they talk about two things. So understanding how to increase the UPI adoption among this customer base, Women's World Banking conducted qualitative research among low and middle income women and arrived at two primary drivers: her digital financial capability and her motivation to use UPI. So this report says that, the women, now you will be surprised that 20 crore women, they have like mobile phone, smartphone, so they can use UPI. But are entire 20 crore using UPI? No, they are not. So that depends on two factors. First, whether they have financial capability, they have skills, they know how to use the device properly and all that. So they should have financial skill, their attitude, their knowledge, their skill of the digital device that they are using, their familiarity and confidence in financial services. If a woman thinks that there is no confidence she has in UPI, she thinks that she will be taken advantage of, then obviously she will not be using, right? And her motivation to use UPI, there is no motivation. She only uses cash and it works well for her. Why will she use UPI? So they divided the women into four category. Okay. So there are four personalities of women. One is cautious balancer. Cautious balancer are those women who have low financial capability, digital financial capability, but they have high motivation. Okay. So I told you that there are two factors. One is the capability and one is the motivation. Both of the things have to be perfect. Only then the woman will use UPI. Okay. So cautious balancer are those women whose capability is low, but their motivation is high. Okay. Then we have explorer. Explorer are the perfect women. They have high motivation and high skill. So they are using UPI. Okay. So explorer we cannot target because they are already using UPI. Then we have fierce conservative, highly conservative women. Their motivation is also low and their capability is also low. So low motivation and low capability, both the things are low. And then we have the fence sitter. Fence sitter are those women, motivation is low, but high digital financial capability. Capability is high and motivation is low. Now tell me, which women should we target? So look, it is very difficult to target low motivation and low capability women. High motivation, high capability, they are using. So the good answer is we have to target these women, cautious balancer and fence sitter. So this report says that cautious balancer and fence sitter are the women that we have to target, right? And this is the next wave of UPI growth. The next wave of UPI growth in the women. See, this report is only for women. Okay, that is why it is called UPI for her. It is not UPI for him. It is UPI for her. So what are the type of women that we should target? We should target cautious balancer and fence sitter. Either they have low motivation, high capability, or low capability, high motivation. I think that is enough in this report. I mean, it's a very long report, but I don't think from exam point of view, anything more you required. Now look, India has a very competent body, CAG, right? Comptroller and Auditor General of India. Girish Murmu is the CAG of India. So with which country we have signed MOU for exchange of expertise between the two countries, capacity building, mutual cooperation? We have signed it with Saudi Arabia. Saudi Arabia and India will mutually cooperate in CAG, right? And also the CAG of India, they have opened International Center for Audit of Local Governance in Rajkot in Gujarat, and they have opened a Navigating Indian Heritage Museum in Chadwick House in Shimla. As per the recently released World Bank's latest report, India Development Update. Now this is a very important report because it is specific to India, right? So India Development Update. India's trade opportunities in a changing global context. India's growth forecast has been increased for financial year 25 to what percent from earlier 6.6%. So for the current financial year 2024-25, earlier World Bank were saying that we will grow at only 6.6%. Now the World Bank is saying that we will grow at 7%. 7%. And let me show you. So this is the report. Again, I went through the report and I will teach you only what is required from exam point of view. The report starts with a summary. In summary, I did not find anything that you already don't know or were not taught before. All the usual things that, for example, India is the fastest growing major economy. This we know already. In the financial year 24, Government of India said that we will grow at 8.2%, right? Government is making a lot of investment in the public infrastructure. The private investments are also growing in India. The construction sector is very buoyant, robust, and there is a low input cost. Input cost means the labor cost. Labor is cheap in India relatively. All those things are there. Then they talked about improvement in the urban labor market. Now, one concern is that the youth unemployment rate is very high, around 16.5%. 16.5% is the youth unemployment rate in India, which is very high. Then they talked about how RBI has maintained their policy rate. RBI has not changed the repo rate for a long time, right? And there is no need because they need to control inflation, right? So headline inflation in the financial year 24 was 5.4%. 5.4%. And let me tell you about the current account deficit of India. Current account deficit of India is 0.7% of the GDP. 0.7% of the GDP, right? Current account deficit. Now, one good question is, what is the difference between current account deficit and trade deficit, or current account deficit versus fiscal deficit? See, current account deficit is very simple. Current account deficit simply means if you are importing more and exporting less, so there will be a deficit, right? So current account deficit occurs when a country imports more goods and services than it exports. So the difference of the two you take and divide it by the GDP, that is current account deficit as a percentage of the GDP. So 0.7% of the GDP. So that means we need to export more and maybe cut down on our imports a little bit. Then it talks about fiscal deficit. What is fiscal deficit? Fiscal deficit simply means when a government spends more than it earns. Right? When a government spends more money than it earns, that is called fiscal deficit. So how will the government then fulfill it? Government will borrow money from abroad. It will borrow money from World Bank. It will borrow money from other institutions. That is how they fulfill the shortfall, right? So the fiscal deficit, central government's fiscal deficit was 5.6% of the GDP when the financial year 24 ended. Then they also talked about the public debt. So public debt was 83.9% of the GDP when the financial year 24 ended. Financial year 24 ended. Then they talk about the medium-term economic outlook of India. So they say it is good. So as I said, from 6.6%, they have increased it to 7%. 7%. And again, the risk factors are there. For example, there are external risks like the war, geopolitical tension, which can increase the commodity prices and critical supply chain. All these things are there. So medium-term prospects are positive according to the World Bank. Then it talks about the fiscal deficit. Fiscal deficit will continue to fall. The budget for the financial year 25 targets a further consolidation of the central fiscal deficit from 5.6% to 4.9%. So our target for the current financial year in terms of fiscal deficit is 4.9% of the GDP. We have to make our fiscal deficit decrease, right? 5.6% to 4.9%. So why this will be there? Because it is driven by a continued reduction of current spending as a share of the GDP, and the revenue growth is robust. So if our expenditure decreases and revenue increases, obviously the fiscal deficit will fall, right? Then the debt to GDP ratio. Debt to GDP ratio is projected to be around 82% by the financial year 27. Now, what is the current account deficit projection by the World Bank? Current account deficit is expected to be around 1 to 1.6% of the GDP. So by financial year 27, it will stabilize at around this figure, okay? 1 to 1.6% of India's GDP by financial year 27. This will be our current account deficit projection. Then we are targeting $1 trillion of export of what? So look, $1 trillion we are targeting goods exports by 2030, and $1 trillion we are targeting services exports by 2030. So our target is $2 trillion of goods and services exports by 2030. So if we have to reach this target, then we need to diversify our exports. See, $1 trillion we want goods export, but goods we need to diversify, right? So currently we are selling what? We are selling only limited things. Like for example, we are selling petroleum products, not petroleum. Petroleum we buy, petroleum products we sell. We are buying crude oil, but we sell petroleum products. Then we sell a lot of gems and jewelry, we sell spices and agriculture products, but we need to make it diversify. We need to sell to more countries and we need to sell more products. Then our trade policy stance features both liberalizing measure and rising protectionism. See, this is one area of concern by the World Bank. World Bank is saying that there is a resurgence in protectionist measure, which means that we are not doing the trade with other countries freely. And how can they say that? They say that because India, for example, we have not joined RCEP. We have not joined RCEP, right? Regional Comprehensive Economic Partnership. So what is World Bank saying? I will tell you. World Bank is saying to India that, look, you have not joined RCEP. Because of that, you are losing. Other countries are gaining at your expense. How? So they are saying, according to the World Bank study, India's income will increase by $60 billion annually if India joins RCEP. Then our income will increase by $60 billion. But if we do not join, then what will happen? If India says, okay, I have not joined and I will not join, then our income will fall by $6 billion. $6 billion annually. So if we join it, then our income will increase by $60 billion. So if we join it, it is good for us. I'm not saying it, World Bank is saying it. World Bank is saying it, right? So RCEP is very important. And they are saying that because of RCEP, countries like China, Japan are gaining. For example, China is gaining $85 billion annually. Japan is gaining $48 billion. South Korea is gaining $23 billion. So India is missing a major portion of the economic gains that can happen from joining RCEP, Regional Comprehensive Economic Partnership, which India has not joined. So by staying out of RCEP, India can face trade diversion, right? Because the RCEP members, they can shift supply chain and increase the competition among themselves. It can harm India's exports. So India should join RCEP. This is a recommendation given by the World Bank. And look, there are countries like Bangladesh and Sri Lanka which have said that they want to join RCEP. So India's neighbors, they want to join RCEP. So that is what World Bank is saying. Also, as I told you that, World Bank says that our exports need to be more diversified. So diversification can be achieved how? That I will tell you. First of all, I will give you some idea about what is RCEP. You should not feel like I have not told you about RCEP. See, RCEP is a regional agreement. Okay, it is a free trade agreement, and RCEP is a free trade agreement. It's a trade agreement between 10 ASEAN countries and 5 more members. 10 ASEAN countries, China, Japan, South Korea, Australia, and New Zealand. These are the 15 countries which have signed RCEP. Now, RCEP was introduced during the 19th ASEAN Summit in 2011. Negotiations began in 2012. Finally, it was implemented from 1st January 2022. So RCEP is the world's largest free trade agreement. Okay, it entered into agreement on 1st January 2022. See, in a free trade agreement, what happens? In a free trade agreement, you don't put custom duty, etc. On the foreign goods, and they became cheaper. You compete with them. But India is hesitant because if we don't put custom duty on Chinese goods, they are already very cheaper. They will become more cheaper. It will hit our domestic manufacturing sector. There are all these concerns, right? We'll not go into too much detail in that. But India has not joined the RCEP. So this is not good for India according to World Bank. I've given numbers also. India should consider because we will gain $60 billion annually. And if we don't join it, we will lose $6 billion annually. Now, how we can diversify our exports was my question to you. We can diversify our export. They said that there are a lot of labor intensive sectors. See, in India, labor is cheap compared to abroad. Okay, so labor intensive sector, we should do better because if labor is cheap, we can produce more. So labor intensive sector are which one? Like textile sector, labor intensive, highly labor intensive sector, apparels, garments, leather, footwear, all this sector. So diversification can be achieved by expanding into more labor intensive sector. The problem is that India's share in global exports of apparel, leather, textile and footwear, this is called ALTF. In 2022, our share in the global exports of ALTF apparel, leather, textile and footwear was only 3.5%. Now, if we have low cost labor in India, this should be very high. This should be 20-30% because we can produce so much textile, apparel, leather and footwear. But our share in the global export was only 3.5%. This is not good. This is not good, right? So we need to focus on these things. This is also a recommendation given by the World Bank. So these things show that India's trade policy is a little bit protectionist. We want to protect ourselves from abroad. We need to integrate ourselves. However, World Bank praised India's national logistics policy. National logistics policy of 2022, we want to reduce our logistics cost. It is 14 to 15% of the GDP. We need to bring it down to 8% of the GDP. So these are reforms that they praised. Also the digital reforms in India, they praised a lot. But we have a lot of tariff and non-tariff barriers to the trade, which restrict India's trade openness. So these things are there. Also, they said that India has signed free trade agreements with UAE, with Australia, right? You know, we signed SEPA, Comprehensive Economic Partnership Agreement with UAE. We signed a similar agreement with Australia. So we are signing bilateral agreements, but we should be more open to multilateral trade agreements like RCEP. So India can consider reforms in 3 areas if we have to achieve $1 trillion export target of goods. Reduce the trade cost, lower the trade barrier, and reevaluate the free trade agreements and trade integration options. And then there was a very nice chart in the report which talks about the fiscal deficit for many major states of India, right? By the way, I forgot to tell you the fiscal deficit of the Indian states that I will tell you. You can see here. Well, the fiscal deficit, the state's combined fiscal deficit in the financial year 24 was 2.9% of the GDP. This is the combined fiscal deficit of all the states of India, 2.9% of the GDP. Now, there are some states in India where the fiscal deficit is very high. So, Chhattisgarh is number 1 in that regard. Okay. Rajasthan is number 2. Andhra is number 3. So, you can see that there are states in India where the fiscal deficit is very high. And this is the data for financial year 24. Chhattisgarh has the highest fiscal deficit in India. That means the budgetary shortfall. Fiscal deficit is when you need more money, but your earning is less. That is called fiscal deficit. So you'll have to borrow. So in this case, Chhattisgarh will borrow from the central government. They will borrow from RBI by ways and means advances. I mean, they will have different ways of borrowing money. So Chhattisgarh is number 1. Rajasthan is number 2. Now let us take a look at some projections. Okay. Current account deficit. So what current account deficit, current account deficit was how much in the financial year 24? It was 0.7% of the GDP, and it will increase to 1.1% of the GDP in the financial year 25. In the financial year 25, current account deficit means import minus export divided by the GDP. Our import, and it will increase from 0.7 to 1.1%, which means our imports will increase or the exports will decrease, right? So this is what they said. Now, what about the fiscal deficit? Fiscal deficit, well, they said that the fiscal deficit will improve. So it was 5.6% of the GDP in the financial year 24. It will decrease to 4.9% in the financial year 25. Fiscal deficit will decrease to 4.9% in the financial year 25. What about the state's fiscal deficit? State's fiscal deficit was 2.9% of the GDP, the combined fiscal deficit of all the state, and it will be approximately same only. It will be 3% of the GDP in the financial year 25. Now there is a very nice table which was given in the report. I have brought it for you. You can see here for the financial year 25, this is the projection, and I'm not talking about 26 and 27. That is far off. So the real GDP growth, they have increased from 6.6% to 7%. Okay. Now let's take a look at the sub parameter. What will be the agriculture growth of India according to the World Bank? It will be 4.1%. So there are only 3 industries, There is agriculture, industry. Industry here means manufacturing sector, and there is services sector. So there are 3 sectors in our economy: manufacturing sector, services sector, agriculture sector. Agriculture growth will be 4.1%. Manufacturing sector or industry sector will be 7.6%, and services sector growth will be 7.4%. So you can see that overall the economy will grow at a healthy 7%. Healthy 7%. So that was the report. I hope you enjoyed the report. who has been appointed as the Managing Director and CEO of Central Depository Services Limited, right? Look, in India, there are two depository. One is the National Securities Depository Limited, which works with the National Stock Exchange. And then we have the Central Depository Services Limited, right? So Central Depository Services Limited works with the Bombay Stock Exchange. These are the two depositories that we have. So Mr. Nehal Vora has become the Managing Director and the CEO. Now, Central Depository Services was founded in 1999 and it is headquartered in Mumbai. United Nations has released $100 million from Central Emergency Response Fund to tackle critical underfunding in humanitarian emergency across how many countries in Africa, Caribbean, Asia, and the Middle East? The answer is 10. The answer is 10 countries. So what is the meaning of all this? What is Central Emergency Response Fund? See, basically United Nations, they have a fund which is called Central Emergency Response Fund. So this fund was launched in March 2006. March 2006. Now there are some countries where there is an emergency situation like lack of food or a war or critical, some critical requirement is there, natural disaster, and there is a critical underfunding. So money is required, but money is not enough. So that time United Nations releases money from Central Emergency Response Fund. Now there are 10 countries in which there is a lot of requirement. So there are 10 countries like Malawi, Cameroon, Myanmar, Mali, Burkina Faso. They have released total $100 million from Central Emergency Response Fund. Now mind you, Central Emergency Response Fund, United Nations, they release the amount 2 times a year. They release the amount 2 times a year. First time they released was in February 2024 and now they have released again in September 2024. September 2024. Now how much did they release in February 2024? Well, they released again $100 million that time, but it was for 7 countries. Now they have released for 10 countries. So overall, if you see in the entire 1 year, they have released $200 million. And it is one of the fastest funding instruments. Money is released very fast because it is humanitarian crisis. Every day you delay, there will be people who will die. There will be people who will die. So that is why they release the money. Now, for which country they have released the maximum money? Well, Yemen. So out of $100 million, Yemen will get $20 million. $20 million will be given to Yemen. Ethiopia will get $15 million. So these are the countries which received maximum funding. But Myanmar received 12 million, Mali 11 million, Burkina Faso, as you can see, 10 million. But Yemen got the maximum, followed by Ethiopia. Union Minister of Agriculture and Farmer Welfare and Rural Development, Shivraj Singh Chauhan, has launched the AgriSure Fund with a blended capital fund of how many rupees? Look, AgriSure Fund will do direct funding and indirect funding. What is the meaning of this? See, direct funding means they will invest directly into the startups. And indirect funding means they will invest into those organizations which invest in the startups. So both the mechanisms are there. 750 crore is the amount. And who will be the fund manager? This is a very important question. Fund manager will be NAB Ventures, which is a wholly owned subsidiary of NABARD. NAB Ventures. And they will focus on those startups which are IT based, because any technology based startups in agriculture technology, because they are scalable, right? The duration of the fund will be 10 years. So this money will be deployed within 10 years, right? They want to fund how many startups? They want to fund 85 startups in 10 years. And in one startup, they will fund maximum 25 crore rupees. Maximum 25 crore. Maximum investment will be 25 crore. AgriSure Fund will be 750 crore, right? And I told you they will invest directly also in the startups, and they will invest in those organizations which are investing into startup. So directly how much they will invest? They will invest 300 crore. So direct scheme, they have something called direct scheme where they will invest in agriculture startups directly 300 crore. And 750 minus 300. So the remaining 450 crore, this is what we call the fund of funds. So they will invest in those funds which further invest into the startups. So for that, the amount is 450 crore. 450 crore. And they will invest in the startups. Understood that? Okay, let's move on. And do remember, fund manager will be NAB Ventures. Extremely important. Which of the following company has made history by becoming the first Indian company to exceed 10 lakh crore in the annual revenue? This is, of course, Reliance Industries Limited. 10 lakh crore or 10 trillion rupees in the revenue Reliance Industries Limited, they achieved this figure in the financial year 24. In the financial year 24. Now, out of this 10 lakh revenue, how much was exports? 2,99,832 crore. Approximately $36 billion. This much export they did, right? So this company is very important for earning foreign exchange for India. It is not like Reliance is important only from manufacturing point of view or like that. No, it does a lot of exports also, right? So Reliance's exports were around $36 billion or almost 3 lakh crore. That is almost 30% of their revenue is exports. Very, very important company from India's point of view. Union Minister Shivraj Singh Chauhan has launched an investment portal to improve agri-businesses, attract investment and increase the farmers' income. What is the name? The name is called Krishi Nivesh. The answer is option C. Krishi Nivesh is the name. Krishi means agriculture, Nivesh is investment. So this portal, all the stakeholders will be there. Farmer will be there, entrepreneur will be there, industries will be there, and the financing institutions like banks, etc. will also be there. So this is for quick, investments. If you want to invest, if you are an investor, you can come here and you will find all the information. You will find all the attractive sectors. You will find easy access to information. You will find information of various central and state government schemes, and you can simply invest. So this will help investors, both individual and the entities. Both individuals and entities, Krishi Nivesh portal will do that. Is that clear? Government has extended the interest equalization scheme for pre and post shipment rupee export credit for one more month till September 30 to promote the country's outbound shipment. This extension is applicable only for what? Look, this extension is applicable only for the MSME manufacturing exporter. How? They will get an interest subvention of up to 3%. 3% interest equalization or interest subvention will be given to them. And look, this is a very old scheme. It was started on 1st of April 2015. And the maximum benefit per exporter was capped at 10 crore. Now this scheme was supposed to end on June 30th, 2024. Then it was expanded by 2 more months. So it was applicable for July and August 2024. In that period of 2 months, the benefit was capped at 1.66 crore per exporter. So it was decreased from 10 crore to 1.66 crore. Now they have increased it for just 1 more month till 30th September, and the benefit will remain 10 crore. But this time it is only for MSMEs, because when this scheme was started, even the ordinary exporters can take the benefit, but for them the interest subvention was not 3%, it was 2%. But for MSME it was 3%. Now even this 2% is not there because this extension is only for the MSMEs. And this scheme is implemented by the Reserve Bank of India. India and which country they have signed a MOU to have collaboration in the areas like knowledge exchange and capacity building in the public sector auditing. Public sector auditing. So again, CAG of India is the master in this, and we have signed this agreement with UAE as well. So the answer is UAE. The answer is UAE. Basically, with UAE, we have also signed an agreement with respect to the nuclear cooperation. So you know that in UAE we have the Baraka nuclear power plant. Baraka nuclear power plant has been set up in Al Dhafra, and it is the first nuclear power plant of the Middle East, right? First nuclear plant of the Middle East. So we will cooperate in that regard. We will cooperate. We have signed MOU with UAE in that regard, right? Civil nuclear energy agreement we have signed with the UAE, and the CAG of India, they have signed an agreement with Saudi Arabia, mutual support, and with UAE both. We have signed with other countries also like Nepal and Bulgaria as well. Who among the following has become the managing director of NABARD Consultancy Services, which is known as simply NABCons? So Dr. Yandra Haragopal. Look, NABCons is a company that was set up in 2003 and it provides consultancy in agriculture, rural development, etc. It is headquartered in New Delhi. NABARD headquartered is in Mumbai, but NABCons headquarter is in New Delhi, and it is a wholly owned subsidiary of NABARD. Wholly owned subsidiary of NABARD. Which 3 states they have been recognized as the fastest growing large states in India by the Ministry of Statistics and Program Implementation? So Ministry of Statistics, they have given some data, and Telangana, Tamil Nadu and Rajasthan, they have been recognized as the fastest growing large states in India. Fastest growing. Telangana's economy grew at 9.2%, right? Tamil Nadu's economy grew at 8.2% and Rajasthan's economy grew at 8%. These are the fastest growing. And look, they are saying that these states are growing very fast because of because these states are not dependent on manufacturing. Service sector contributes a lot. Service sector. For example, in Telangana, 63% of the total gross value added growth is attributed to the service sector. And service sector is growing like crazy in Telangana. It is growing at around 11%. Now, what is service sector? Service sector is healthcare, healthcare sector, education sector, tourism sector. All of these are service sector. So, 9.2% was the growth of Telangana. And the contribution of the service sector in their total gross value added growth was 63%. Then they talked about Tamil Nadu. In Tamil Nadu, the service sector's contribution to the gross value added growth is 52%. So they say that these states are growing because services sector contributes a lot in their gross value added growth. Now, which is the largest economy in India? The largest economy in India is Maharashtra. Still, it is Maharashtra. So there is no change in that front. Moving on, the Indian Institute of Management Kozhikode, they have a organization called LIVE, Laboratory for Innovation, Venturing and Entrepreneurship. They have signed MOU with which organization recently to foster innovation and research, especially in the fintech sector. So IMK's LIVE will work closely with Reserve Bank Innovation Hub, RBIH, which is headquartered in Bangalore. And RBIH was set up in 2021 by the RBI. It is a wholly owned subsidiary of RBI. And IMK LIVE was set up in 2016 by IM Kozhikode, which is in Kerala. The third edition of State Bank of India's ASHA scholarship program has been launched by State Bank of India Foundation. They want to support how many students? Well, total number of students they want to support is 10,000. This is the SBI ASHA, and let me tell you more about it. Look, this is the third year of ASHA. ASHA scholarship program was launched in 2022, and they want to help the students from underprivileged communities to make education more accessible to them, right? So since the launch in 2022, ASHA has supported approximately 3,198 students. And look at the target for this year, 10,000. Massive target. Let me tell you more about it in detail. This is the official website of the SBI Foundation, which is the CSR branch of the SBI. So they are divided into multiple types. Now, first, let's talk about the SBIF ASHA scholarship. SBIF is SBI Foundation for school students. So for school student, the family income of the aspirant should be less than 3 lakh rupees. And 50% of the slots will be for females, and preference will be given if you are SC, ST, right? And you should be a school student, class 6 to class 12. And 15,000 rupees each will be given to the student so that he can study. So students will get 15,000 rupees annually. Now for undergraduate student, if you want to do a BCom, like some degree, undergraduate degree. Now here the difference is that the family income, it should be less than 6 lakh rupees. Okay. Then 75% marks you should have in your previous academic year. Then applicant who are pursuing a UG course from any premier university or college in India as listed in the top 100 according to the NIRF ranking. National Institutional Ranking Framework, NIRF ranking by Ministry of Education. You should be studying from a top 100 college according to NIRF ranking. Then only you are eligible. Okay. And the amount is 50,000. So for school students, the amount was 15,000. But for a UG student, the amount is up to 50,000. Then let's talk about the PG student. Amount is up to 70,000. And the same things. Again, 75% marks, 6 lakh family income. And again, you should be from a top 100 institute. Then there is a ASHA scholarship program even for the IIT students who are studying from like IIT, right? So again, 75% marks and 6 lakh rupees family income limit. But here the amount is 2 lakh rupees. 2 lakh rupees. Then IM students, amount is up to 7.5 lakh rupees. For IM students, 7.5 lakh rupees. So that is ASHA scholarship for you. The Finance Ministry has relaxed the norms for expenditure exceeding how much to accelerate the capital expenditure that is pegged at 11.11 trillion rupees. Look, in the budget, Nirmala Sitharaman said that in the financial year 2025, we will spend 11,11,111 crore on the capital expenditure. Now, the government department, they have to release money, right? Only then they will be able to spend that much. So 500 crore, if the amount is more than 500 crore, then there were some rules which have been released. To give you an example, if the amount was between 500 to 2000 crore, if the amount was between 500 to 2000 crore, then the amount was released by the departments from 21st to 25th of the month to take advantage of the GST inflow. Similarly, if the expenditure was more than 2000 crore, which was required to be released by any particular department, then usually they did it in the last 15 days of the last month of the quarter, right? Because that time there was direct tax that came. So in the last quarter, because advance tax comes, no, so last 15 days of the last month of a quarter. But all these relaxations, all these rules have been now revoked and you can release money. So that the rules and regulation regarding the timing, they have been relaxed, right? So that is what they have done. Which organization has hosted the financing summit? I have already told you. It was hosted by the CII, and very, very important summit, financing summit. It was hosted by the Confederation of Indian Industry, CII, right? It took place on 2nd and 3rd of September in Mumbai, in Maharashtra. Which of the following bank has announced its decision to become a signatory to the Partnership for Carbon Accounting Financials? This is the Union Bank of India, one of the largest public sector banks of India. So what is the meaning of this? Well, a joining of PCAF, it shows the commitment of the bank to fund the climate friendly projects, right? Basically, PCAF is a global partnership. PCAF was started in 2015 by some Netherlands or Dutch financial institution. Then they extended to North America in 2018 and then globally in 2019. So PCAF is now a global organization, right? So what does it do? Well, what they do is, I'll tell you, they basically develop the global greenhouse gas accounting and reporting standards for the financial industry. That is what they do. So if a bank joins PCAF, then it shows its commitment to global green financing, climate friendly guidelines and all of that. So Union Bank has joined PCAF. Indian government has appointed whom as the new finance secretary? Who is the new finance secretary of India? Finance secretary will be Mr. Tuhin Kanta Pandey. Tuhin Kanta Pandey. Why? Because the previous finance secretary, Mr. TV Somnathan, has now become the cabinet secretary. He has now become the cabinet secretary. Which state has signed a MOU with the World Trade Center Association for setting up World Trade Center within its ambitious AI city? Which state of India is setting up AI city, artificial intelligence city? So it will be set up near Hyderabad by Telangana, and within that there will be a World Trade Center. So they have signed agreement with World Trade Center Association. So World Trade Center will be like 1 million square feet of space, and all these big companies which have AI, which have emerging technologies in AI, they will be there. So it will be a very large area. It will offer world-class spaces, trade services, training facilities in the AI sector, right? So Telangana also has a target of becoming a 1 trillion economy. And Telangana, in fact, recently they celebrated, or they organized, Global AI Summit also in Hyderabad on 5th and 6th of September. Moving on, UK-India Infrastructure Financing Bridge Agreement was signed between the City of London Corporation and which organization to strengthen the financial and professional services partnership between the two countries? So it was signed between the Niti Aayog and the UK organization called City of London Corporation Limited. So what do they want to do? Look, this UK IIFB, it has been operationalized. This is an agreement, right? UK IIFB, it has been signed for 2 years. Okay, it has been signed for 2 years. And it was announced last year during the India-UK Economic and Financial Dialogue that was held in Delhi in September 2023. finally it has been signed. So this agreement, what is the objective? It is to have sustainable infrastructure investments into India. UK should make large investments into India's infrastructure. So that is what they want to do. Moving on. Recently, by the way, can you tell me any project in India that is UK is financing in India? For example, the Delhi Meerut RRTS. Even some green hydrogen projects in India, they are benefiting from this, and UK is ready to invest large scale into India. Investor Education and Protection Fund Authority, IEPFA, they have celebrated their Which Foundation Day in collaboration with NCAR and Institute of Company Secretaries of India in New Delhi. They celebrated their 8th Foundation Day. Investor Education and Protection Fund Authority, right? Basically, this is an organization that was started towards investor protection, investor education. That is what they want to do. And there was a conference that was organized on investor protection recently. So IBPFA, you should know about it definitely. This is an organization that was started on 7th of September 2016, right? And it works under which ministry? It works under the Ministry of Corporate Affairs, not Ministry of Finance. It works under the Ministry of Corporate Affairs. In fact, you must be remembering that a few years back I told you Niveshak Didi initiative. Niveshak Didi, they started with the India Post Payment Bank this initiative to promote financial literacy in women. They also started Niveshak Sarthi initiative. They also launched a film called Bachat Nama about financial literacy. They are organizing financial literacy camps. I mean, a lot of things they are doing, right? So they in fact set up a fund also, Investor Education and Protection Fund. Investor Education and Protection Fund, right? The money in this fund is used for financial literacy. Financial literacy. Which of the following organization has launched Dawa Suchak or claim status tracking, which is an online tool that allows the depositors to track the status of their claims by entering their registered mobile number on their website. So Dawa Suchak has been launched by DICGC, Deposit Insurance and Credit Guarantee Corporation, and you can check the status of your claim in real time. So Dawa Suchak enables the depositors to check the status of their claims. These claims should be placed after 1st April 2024. And you know that like what type of claims I'm talking about. What does DICGC have to do with the insured amount, insured claim? So let's say you have put money in some bank, okay, ABC Bank. You are an investor. Now you put 3 lakh rupees, okay. Now this bank has defaulted, but since it is a bank, it is protected by DICGC Act of 1961, which means that your up to 5 lakh rupees is protected, okay. So the insurance limit, it was only 1 lakh earlier, but in February 2020 it was raised to 5 lakh. So you are happy. You are happy not because the bank has failed, but because your money is secure. So even though the bank has failed, your 3 lakh is secure because the limit is 5 lakh. So you can check the status of this 3 lakh in real time, right? So this corporation DICGC is responsible for reimbursing insured amount to the depositors of failed banks. That I'm talking about. I'm not talking about normal insurance. I'm not talking about that. You can check the status of your claim. If a bank has defaulted, you can check it in real time. And DICGC, by the way, is it works under Ministry of Finance, and it was set up in 1978. 1978, right? Okay. Which of the following state government has launched first of its kind National Common Mobility Card for cashless travel across India, enabling the user to access public transportation nationwide without cash? Without cash. So it has been launched by the government of Himachal Pradesh. I've noticed one thing. When they are not the first, they write first of its kind. You know, because I mean, National Common Mobility Card, where you can pay without cash, and I mean, all these things, they have been launched by other states also. But okay, it is first of its kind. So this card is a first in India. It allows cashless travel in public transport system across India. And yeah, just remember that it enables the users to access public transportation nationwide without cash. Moving on. And by the way, this card, they have partnered with SBI. You can see SBI written here. So they have partnered with State Bank of India, and it's a contactless card. It's a EuroPay, MasterCard and Visa EMV chip-based prepaid card. The card comes with a one-time issuance fees of 100 rupee and you can easily recharge the card. Maximum balance limit is 2000 rupees. 2000 rupees. Open Network for Digital Commerce, ONDC, you know. So they have appointed which person as their non-executive chairman? ONDC, DPIIT, Ministry of Commerce launched ONDC in 2021. It is a government's version of e-commerce. So R.S. Sharma, very competent bureaucrat. R.S. Sharma, he has served as the chairman of Telecom Regulatory Authority of India. He was the, in fact, mission director of UIDAI. He has also served as the CEO of National Health Authority. So he is now the non-executive chairman of ONDC. Government has notified which organization as a public finance institution under the Companies Act of 2013. So it is NABFID. And NABFID has nothing to do with NABARD. So don't confuse it with NABARD. It has nothing to do with NABARD. It is a bank. It is like a bank. It is an All India Finance Institution. There are only 5 AIFI in India. Like NABARD, like Exim Bank, like National Housing Bank. So AIFI. All India Finance Institution. Now look, under Section 2 of the Companies Act of 2013, under Section 2 of the Companies Act of 2013, that government has notified NABFID as a financial institution, public financial institution. So giving it the status of public financial institution will allow it to finance very large scale infrastructure projects. NABFID is a relatively new organization. It was set up in 2021. It is headquartered in Mumbai. Which nation has become the 10th member of the BRICS New Development Bank? New Development Bank is headquartered in Shanghai. And Algeria has become the 10th member of the New Development Bank. It's a multilateral bank. It was set up by the BRICS countries, and Dilma Rousseff is currently the president. Dilma Rousseff is the former Prime Minister of Brazil. Currently, she is the president of NDB. And recently, they had their 9th annual meeting, New Development Bank, where they organized it in Cape Town, which is a city in South Africa. And the 10th meeting will take place in Brazil in 2025. So the total members are now 10, right? Algeria is the 3rd Arab country to join it after Egypt and the UAE. And Shanghai is the headquarter. Moving on, which of the following organization, along with International Solar Alliance that is based in Gurugram, has announced the establishment of a multi-donor trust fund that aims to expand the access to support renewable energy globally. Renewable energy globally, so Multilateral Investment Guarantee Agency, MIGA. Again, MIGA is also a part of the World Bank Group, and along with International Solar Alliance, they will set up a multi-donor trust fund that will, what will be the name of that? It will be called MIGA ISA Solar Facility. Solar Facility. So they will focus on sub-Saharan African countries if they want to expand their renewable energy. Which of the following entities merger proposal with Tata Capital has recently been approved by the Competition Commission of India? Tata Motors Finance Limited is getting merged with Tata Capital, right? Both the companies are based in Maharashtra. Tata Motors is based in Thane. Tata Capital is based in Mumbai. So they will merge. Basically, the transaction will ultimately lead to Tata Motors owning a 4.7% stake in the combined entity, right? Actually, Tata Motors Finance is a vehicle financing arm of Tata Motors. And once this merger is complete, then of the merged entity, Tata Motors will own 4.7% stake in the combined entity. Ministry of Finance, they are planning to sell what percentage of their stake in GIC-RE, General Insurance Corporation of India, through an offer for sale to raise around 4,700 crore rupees. Now you need to understand what is offer for sale, and it's very easy to understand. Offer for sale simply means that offer for sale is when the promoter or the owner of a company, right? Even if you are a non-promoter or a non-co-founder, but your holding has to be at least 10% to go for offer for sale. So if there is a promoter of a company or owner of a company, right, they would want to sell their own stake, right? So then they can do it, but they should have at least 10% of the share. So let's say there is a company ABC and there are 5 owners. And out of 5 owners, 4 owners, they have 5% stake, right? And the 5th owner has a 80% stake. So only the one with 80% stake can take the offer for sale route. Because to make the use of this route, offer for sale was started by SEBI in 2012. And through this route, any promoter who has more than 10% shareholding can sell his shares and dilute his own shareholding. That is, he wants to decrease his shareholding. That is why he is selling his shares. So that is called offer for sale. Now, in the case of public sector companies, the government wants to decrease its stake through offer for sale, right? Because there is a 25% minimum public shareholding that they have to comply to. So GIC wants to sell 6.78% of its shares through offer for sale, and they want to raise approximately 4,700 crore through this, right? In fact, the last time they did it was in 2017, and so 6.678. So they want to, government will divest 3.39%. This is sure. And if the subscription is high, then additional 3.39%, this will be the green shoe option. Green shoe option means that they will retain the extra subscription. So they want to divest 3.39%, right? 3.39%. Currently, what is the Government of India shareholding in GIC? It is 85.78%. 85.78%. So 3.39% is committed by the government. We will sell 3.39%. But if a lot of people show interest and extra money comes in, then we will have a green shoe of 3.39. We will double the number of shares that you want to invest. So this is what it is. And the 85.78% is the government shareholding, and they have to bring it down to at least 75, because the minimum public shareholding has to be at least 25. So they need to bring down their share to less than 75%. And GIC is based in Mumbai. It was incorporated in 1972. Which of the following bank has introduced Giga? So Giga is a comprehensive financial suite tailored for gig workers and freelancers. Gig workers are who? Gig workers are the workers like your Zomato delivery boy is a gig worker. Ola driver is a gig worker, right? So these are called gig worker. And Giga. So Giga has been launched by HDFC Bank. It's a very catchy name, Giga. So Giga will give you a specialized saving account, specialized current account, debit card, specialized credit card. All of these things Giga will give you, right? Now look, in a Giga is a flexible saving account. The only condition is that you have to maintain a quarterly balance. In 3 months, the quarterly balance, it should be 10,000 rupees minimum if you are in a metro or urban area, and 5,000 if you are in a semi-urban or a rural area, and you will get a lot of options, right? In fact, you will get a Giga debit card, which will give you a personal accidental death cover up to 10 lakh, personal accidental death cover of 10 lakh. In fact, health insurance will also be given. So HDFC Ergo will give you, if you are a gig worker, then they will give you health insurance also at very affordable rate. I mean, all of these options are there, right? So if you are a gig worker, you can go for the Giga. And HDFC Bank, they have also launched Digi Passbook feature on their Smart Wealth app. It allows the users to consolidate and manage all their equity investments, exchange traded fund, and demat account in one place. Payment Council of India, National Payment Corporation of India, and Fintech Convergence Council, they organized the Global Fintech Fest where, so I told you, they organized it in Mumbai. Shaktikant Das launched 2 innovative digital payment products at the Global Fintech Festival. One is Bharat Bill Payment System for Business, and second is UPI Circle. UPI Circle I have already explained to you in detail in my last video, right? UPI Circle. But nonetheless, I will explain you once more in very brief. What is UPI Circle? See, in UPI Circle, you can, in UPI Circle, you can mark people in your circle. You can create your own circle basically, right? That is what you can do. It allows the primary UPI user, which is you, to delegate the payment responsibility to trusted secondary users. Okay, one primary user can add up to 5 secondary users, but one secondary user can only accept delegation from one primary user. And what is the limit? So there is full delegation, in which there is no need for approval, and one is partial delegation. So in partial delegation, the primary user will have to accept the payment request. In full delegation, there is a monthly limit of 15,000 rupees, and there is a per transaction limit of 5,000 rupees. 5,000 rupees. That is a per transaction limit, right? And per month limit is 15,000. RBI Deputy Governor T. Ravi Shankar has launched UPI Interoperable Cash Deposit at the Global Fintech Festival in partnership with NPCI. What is this? Very, very interesting and very, very simple in my opinion. Look, you go to a ATM. Okay, this is your ATM. You go to a ATM. Now, ATM, you will find what? You will find a cash recycler or deposit machine. So you don't need your card. I repeat, you don't need debit card. You don't need credit card. You don't need any card. What you need is a mobile app, UPI app. You can use any app you want, right? You can use Bharat UPI. You can use Google, GPay, PhonePe, whatever. So let's say you are this guy and you want to send money to this guy using your UPI app. One is, of course, you do UPI, but there are other ways. For example, cash deposit. Now you go to ATM and there will be a QR code. So you scan that QR code using your UPI app. You select the beneficiary and authorize the payment using your UPI PIN. Now, how to do that? See, the problem I'll tell you. Let's say you have 5,000 rupees cash and you want to send it to your friend. Now you don't have 5,000 rupees in your UPI app. That is a problem. How to send to your friend? You have cash in hand. How to send it to your friend who is sitting 1,000 kilometers away from you? If this 5,000 was in your UPI app, you will send immediately. To solve this problem, this UPI ICD has been started and it is interoperable. You can use ATM of any bank because it is interoperable. So you go to ATM, you scan the QR code. See, there will be an option. First, there will be an option which is called UPI cash deposit. UPI cash deposit. So the customers will select the option UPI cash deposit in the ATM. Then they will get a QR code. You scan the QR code, you enter your UPI PIN, and then it will ask you to deposit cash. The CDM machine, CDM machine, you must be knowing what is a CDM machine. CDM machine simply means a cash recycler or deposit machine. That is called a CDM machine. Cash deposit machine, you can say. So then you put 5,000 rupees in the ATM, it will suck the money and then it will send the money in the beneficiary's account. So this is called UPI ATM ICD. UPI ATM ICD. It is interoperable, it is cardless, but there is a transaction limit. What is the transaction limit? So the transaction limit is less than 50,000 rupees per transaction. That is written on the NPCI official website. Transaction limit is not more than 50,000 per transaction. Okay. And yeah, that's it. Federal Bank Limited has introduced Smile Pay. It is the first of its kind, facial recognition based payment system. So the initial rollout of Smile Pay is being conducted in collaboration with Reliance Retail and Swatantra Micro Housing. This system is built on face authentication service of UIDAI, ensuring secure transaction and eliminating the need for cash, card or mobile devices, offering greater convenience for customer and improved efficiency for merchants. Gujarat-based company, which is called HDB Financial Services, it has become the first NBFC to launch the NPCI's eKYC Setu system. eKYC Setu system. Look, who invented eKYC Setu? It is a collaboration between NPCI and UIDAI. Global Fintech Awards. Now look, I told you Global Fintech Festival happened in Mumbai, but there were awards also that were given. So the awards were given in 3 categories and 19 subcategories, right? This was the 3rd edition of the Global Fintech Awards. So these are the winners. I don't think they'll come in the exam, to be honest, but okay, let's go through them. So Green Banking Initiative of the Year, PNB. First is the Banking Technology Award. Okay. Best Cross-Border Solution, TerraPay. Best Digital Banking Security Practice, Epify. Best Business Correspondent, PayPoint. Finest FinTech Solution. Best Digital Public Infrastructure, Protean. Best In-Class InsurTech Solution, Plum Benefits. And you can just go through it. I again don't think they'll come in the exam. Best Payment Solution, IndusInd Bank. Excellence in Cybersecurity, Union Bank of India. Then Special FinTech Award. FinTech Startup of the Year is PayGlocal, not local, Glocal. FinTech Person of the Year is Samir Nigam, founder of PhonePe. FinTech Person of the Year Global is Melissa Frackman. She is the CEO of a company called Emphasis Ventures. And FinTech Woman of the Year is Shalini Warrior. She is the Executive Director of Federal Bank. Recently, which of the following company has launched India's first Braille insurance policy called Spatial Care Gold? designed to the needs, cater to the needs of persons with disability, especially visual disability? The answer is Star Health. As per recent information, which of the following country has become the largest weighting? When I say weighting, it means the weightage of this country has increased. MSCI, Emerging Market Investable Market Index, EMI, overtaking China? The answer is India. The answer is India. What is the meaning of this question? See, the weight of India is 22.27%. China's weight in this index is 21.58%. So we have overtaken China. This is what we call MSCI, Emerging Markets Investable Market Index. It's a comprehensive index. It has large, mid and small cap stocks from 24 emerging market countries. From 24 emerging market countries, right? So India now has highest stake, largest weightage. This was announced by Morgan Stanley. So you should be very wary of these questions. These questions are important, and yeah, a lot of people don't do this, right? MSCI is an American finance company headquartered in New York. MSCI is what? Morgan Stanley Capital International. IRDAI, Insurance Regulatory Development Authority of India, they have issued a master circular aimed at enhancing the rights and protections for health and life insurance policy holder. As per the circular, the policy holders will have a free look period to review their policy term. So 30 days is the free look period for insurance policy. Free look period, you can see the policy for yourself, and free look period is basically you review the policy. If you are not satisfied, you can take a refund. That is called a free look period, right? So master circular has been issued by IRDAI in that regard. And there is a customer information sheet. So it is a statement provided by the insurance company along with the policy document that provides in simple word important information and basic features of the policy issued at one place. If you are buying an insurance policy, all the terminology has to be explained to you in very simple words. Customer information sheet is that is what it is called. And what will be there in the customer information sheet? Everything. It will specify what type of policy you have taken, whether it is a term insurance, whole life, or other insurance type like endowment or whatever. And free look period will be 30 days. Cashless claim settlement within 3 hours. So if you are taking a health insurance, the cashless claim settlement has to be done within 3 hours. And then according to IRDAI, the death claim, except the cases where investigation is required, should be settled within 15 days of initiating the claim. In death claim where investigation is required, it should be completed within 45 days. So death claim has to be settled within 15 days, and if investigation is there, within 45 days. Surrender or partial withdrawal request should be settled within 7 days of initiating the claim. Within 7 days of initiating the claim. So a lot of user-friendly things they have been said by IRDAI. Financial Services Institution Bureau, FSIB, which was known as Banks Board Bureau, but name was changed to FSIB. They have recommended whom to become Managing Director of the State Bank of India. Managing Director of State Bank of India will be Ram Mohan Rao Amara. And Challa Srinivasulu Shetty has become the chairman of the SBI. Look, SBI has 4 managing directors. Ashwani Kumar Tiwari, Vinay Tonse, Rana Ashutosh Kumar Singh, and now Ram Mohan Rao Amara. State Bank of India has launched a mobile app called OneView. OneView is designed to handle SBI's National Common Mobility Card prepaid card, allowing the customers to top up, track and manage their cards from a single platform. As per recent data, which state has got the highest FDI in the April to June quarter? So you can see Maharashtra got the highest FDI, 70,795 crore. Second was Karnataka, 19,000 crore. Third was Delhi, 10,788 crore. So this is a data that was released by the Government of India. SEBI has made a committee, 22-member advisory committee, to streamline the rules for listing obligations and disclosure. Who will chair the committee? This committee will be chaired by R. Gandhi. R. Gandhi, he is a former deputy governor of the RBI. So all the obligation and disclosure, they have to be assessed by this committee. Which company has introduced India's first Android-based cash recycling machine, ATM, in collaboration with NPCI? Who has done it? Hitachi Payment Services Private Limited. Hitachi Payment Services Private Limited. Basically, this cash recycling machine, what is the name? The name is HPDX BU01. It works like a digital banking unit. It will give you a lot of services it can process home loan application, credit card application. You can make investment in fixed deposit. Lot of facilities it will provide you. Understood? Bank of India, they have launched a fixed deposit scheme called Star Dhan Vriddhi. 333 days you put your money and you get attractive interest rate. So maximum you can deposit 3 crore rupees. You will get 7.25%. If you are a senior citizen, you will get 7.75%. And if you are a super senior citizen, you will get 7.9%. Mumbai-based Kotak Mahindra General Insurance Company, they have rebranded itself as Zurich Kotak General Insurance Company. This is the new name, Zurich Kotak General Insurance, because the Zurich Insurance Group, they acquired 70% stake in Kotak Mahindra General Insurance. So now it is a 70-30 joint venture. 70% is owned by Zurich, 30% by Kotak. That was a video banking awareness for the month of September. This is only part 1. Wait for the September to finish. I'll bring you part 2. Thank you for watching StudyIQ.